Right, this video is going to talk about booking a real estate property purchase and specifically a flip. So this would typically be a property that's sold within a year and it's not going to be depreciated. And this would work well if someone wants to use the projects feature. And flips are typically going to have a larger budget. So it works well in that respect. Let's take a look. Okay, we're just going to walk down the HUD, the settlement statement, and add our properties. So let's go ahead and add this. We're going to make these cost of goods sold. Guess this doesn't really matter. And now we're going to use, of course, you can organize your chart of accounts however you want. We'll make this COGS as well. So in other words, we're booking everything on the P&L instead of the balance sheet, like we would with a long-term hold or property. So this is our points. And that's down. Here's our points. Yep, here's our points. Okay. And let's keep going down. Let's put our interest next, which is here. Okay, and let's put the rest of the closing costs here. Okay, so this is going to be 15. Actually, we'll put this in a second. So this is going to be our remaining closing costs. Okay, and let's put in our holding costs. And again, we're booking everything to the P&L with these. So this will be our tax here. And then let's do another. This will be our county. Okay, and then we have our taxes, insurance, escrow. We have that. Right here. So tax. Insurance escrow. This is an asset, essentially. We're prepaying it, not really, but we're sending it to the escrow company. Okay, and let's put in a construction escrow. So this is pretty common with flips, where you have money that you draw from. Okay, we see this right here. And now we have our earnest money deposit. And this transaction would have already been in the books when we paid that prior to closing. We're just booking what happens at closing. So there's our earnest money deposit there. And we have our loan. We'll just use this liability already set up. Okay, and then we had one other city taxes here on the credit side. Okay, and then this should be the amount. If we did it right. Oops, I did something wrong. Because it should be 202,655.07. Let's see what I did wrong. Okay, we got, oh, I forgot to put this back in. That's right. Okay, so we have 15,855.07 minus our points minus daily interest minus, what else do we have down here? We're including our escrow minus 500. Okay. So now we're off by exactly $100,000. What did I miss? Oh, our construction escrow didn't go in for some reason. What happened there? All right. Strange and bizarre. Stranger things have happened though. Let's put that up. Where did I that? Okay. Now our JE balances. Let's go ahead and save and close this. And let's take a look. Actually, first let's put our classes in here. It's always a good thing to do for properties, especially when you get more than one. If you're using projects, it would be customers. So actually, let's use customers with this one. So I'm just going to go back into this journal entry. Okay. So our customer is going to be the property address. All right, so I'm going to put that in for everybody. Okay, now let's save and close. And if we were using the projects feature, that would show up there, but I haven't set anything up in here yet. Okay, so let's just look at the reports. So not hitting the balance sheet, this one. I'm just going to keep our JE up in this other screen just to reference as well. The only thing that's hitting, oh, there's a couple things hitting the balance sheet. So we'll look at that in a moment. So let's show this by customer. And let's have only the 123 Main Street customer. Okay, so there we go. This makes a really clean way to see everything too. And you can sort by customer. We have our purchase price, our buying costs, holding costs, our debt service. What's the rest of it? Let's see. The purchase price, debt service. Yep. Buying costs. Yep. Holding costs. These are going to be on the balance sheet. Balance sheet, balance sheet, holding costs. Yep. Okay, great. Let's look at the balance sheet. Okay, and we'll do the same thing. And now I want to go here. Of course, you have multiple properties. You can just switch back and forth. Okay, so we have a construction escrow, like we talked about, and the draws will reduce that. Purchase deposits would normally be 0. I didn't put in a deposit ahead of time. That would be cleared out. Tax and insurance escrow. Here's our loan. So everything is booked from the journal entry. And then, of course, it hits the checking account too. But that's not showing up by customer because we don't assign a customer to the checking account. Everything else is booked, and we can use this with projects and budgeting using this customer. And since everything, well, since the items we want to track in projects and budgeting are booked to the P&L, that works with the projects.